Welcome to the Hamsi Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Tuesday, June 12, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at 1,596. We saw that we sold off in the morning and then the market breath. It started climbing and finished at the highs of the day. The same is true for the Nasdaq advanced decline differential with close at 906. There were 5 new 52-week highs for the S&P 500 and 12 new 52-week lows for the S&P 500. For the volatility, there were 325,000 contracts traded on the VIX and 48 million in total premiums paid. For the dollar-weighted put-call ratio in June, we saw a 0.63 reading with 33% of the total premiums paid. Although this is not a big reading or a bullish reading, we saw an increase throughout the day. We were on the morning at 0.17, so we're looking at the marginal change throughout the day to see how the bullish or the bearish sentiment changed. Throughout the day, it kept on getting more bearish and bearish until the close, which closed at 0.63. Okay, here we have the daily chart for SPX. Here we have a big update today, 1.25% almost. It was good. We almost took everything we lost yesterday. Again, what you're seeing here, you can see here again the left shoulder, the head, and now we're forming the right shoulder here. Here I have the levels from the last summer's low. Here's some Fibonacci levels that we're watching. 3040 looks like an important level. So, but first we need to break here, as we've mentioned here yesterday. So that's going to be important for the SPX. We'll see what happens tomorrow with some economic data we have. So that's going to be key. If we look at intraday chart, today was a positive action. We sold off at the beginning. Let's look here. We sold off at the open, but then quickly bounced back, coming here and ending at the lows of the highs of the day. Sorry, which was very positive. We just changed trend throughout the day and just went higher all day long. So that was good. Again, as I mentioned yesterday, this is at Fibonacci levels from the lows of last week. So they're gonna, as you can see here, they have been acting pretty good here. Also, when they break, we sold off until here, and we stopped here. So they're acting pretty good. So now our next level to the upside would be taking the highs from yesterday open. Those are here. You can see that's the level at 1335. It's gonna be a key level to take out. So we'll see what happens. Now let's look at the SPY. At the SPY chart. Okay, this is the hourly chart for the SPY. You can see here. Again, we finished almost at the trend line that we drew yesterday. Important here to break to get above and make that bottom of inverse head and shoulder bottom that we're forming right now, which is positive for the upside. Again, as I mentioned, I'm looking at the 34 level as the final decision to change the bias to upside. That's going to be the key levels. We saw positive action ending at the highs of the day. Pretty good for the market. Now let's look at the Sigma channels for the SPY to see how we're doing here. This is the daily chart, taking almost half of yesterday's loss, as you can see here, finishing at the, we broke the 0.6 line here. You saw it to the upside. Pretty good action. We're now at the positive 1 sigma, 133. So that's good for the market. CI is now flat. There's nothing happening here. We want to see a break of the 34 level to the upside to complete this formation of the inverse head and shoulders that we're talking about, this bottoming process that we're doing here. And after that, looking for 36s. They're gonna be key level from that. Above that, we were gonna look at the higher levels, but we're gonna have to look at the weekly chart for that. So for now, let's break the 34 level that we are gonna having some resistance and some trouble there. If we look at the weekly chart for the SPY, right now we're almost coming back to a positive. If we're able to rally, we're gonna make a hammer, which is gonna be pretty positive. We want to break the 0.6 line for the weekly. This is gonna be key here at 36, as I mentioned. That's gonna be the 3 sigma for the daily or the 0.6 for the weekly. Above that, we could go and test go higher. But again, we need to break the 34 level first here to the upside, and then we'll see what happens then. In case of a reversal, and we actually go lower based on bad numbers tomorrow, maybe we're actually forming a double top here, a double top instead of a head and shoulders, and we do break this neckline here. We're going to test the lows here at 33, maybe at 27, sorry. Those are gonna key level, but again, as I mentioned yesterday, we need to break the 29s, which are the 200-day moving average. So lots of levels here to the downside. Right now, that's what we got on the SPY. Okay, now let's look at GLD to see what happened today. Here we have the daily chart for GLD. As you could see here, we had a good day today. We continue to see this upward momentum here after we bounced off 0.6 line Friday and Monday, which is good. Again, we want to see a higher high, so we want to break this 58 level. We're looking for the 61, the 3 sigma. That's going to be key for making a higher high on GLD, and that will also put us with a higher low, as we mentioned yesterday. So we could look here, we're basically forming we could draw a trend line here from the lows here. Maybe we could pull back a little, but then go back higher. That would be perfectly fine. You could see here the trend line I just drew here. Perfect. If we go to the moving averages right now, for GLD, we're at a critical level. We do want to break this 50-day moving average and test it to the lows. We have not been able to do it after this big gap up. We tested, but we failed to hold it. And then here again, we did close above it, but then Bernanke just came out and ruined the party for the gold. Looks like again today we tested, we did not break it and close above it. So we want to do close above the 50-day moving average. That would help us going to the 61 level we're looking at, which is also the 100-day moving average. So we're gonna look at those levels right now. And below we're looking against the 20-day moving average, which is at 153.7. That's gonna be key level to hold, as we've been holding those levels for now 4 sessions right now. So that's gonna be important. Okay, on the VIX chart, here we have it. This is the daily one. You could see we were 6% down today, but yesterday we had a big update. We broke the 0.6 line to the downside. Yesterday we basically closed at it. So we were watching if we were going to break it and go higher, maybe go on test the highs that we made a couple of last week here. We did not. We broke lower, so maybe we are going to see below 20. That's what we want to see here. Below 20 on the VIX would be perfect. A lower volatile environment, the market going higher, that would be pretty good. On the moving averages for the VIX, you could see here the same. We did not break the 10-day and close above it. We're right now up below the 20, so now we're looking to test the 50-day moving average here, the blue line, at 20 basically. So we're gonna go here. We need to break that one to make a couple of lower lows here. Now that this trend has been going lower, for the intraday action on the VIX, let's look at the 30-minute chart. Here you can see that we started selling off, VIX went higher. It looks like we were going to do the same thing as yesterday, but pretty much after we just got a rally, and look at the huge drop on the 30-minute chart here, a big reversal on the VIX, and then we just basically stayed range bound the whole day and ending at the lows of the day, which was pretty good for the market overall. So we're gonna see what happens tomorrow with the VIX. If we wanted to go lower, maybe test the 20 level would be perfect here. We do not want to see a huge spike on the VIX to bring volatility back to the market. We just wanted to slow grind lower, make lower lows here until it finally gets to a volatility around 17 or 18 would be the perfect environment we're looking at. Have a great day. We'll see you tomorrow. We have a special offer by TradeStation. Get your Hamsi Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below.